Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. Today, we're going deep on what could be one of the most transformational deals shaping the AI and semiconductor industry in 2025. Nvidia's reported $2 billion equity investment in Elon Musk's xAI during a $20 billion capital raise. This is a massive strategic move with implications not only for both companies, but for the broader AI hardware market, chip supply chain, and technology innovation ecosystem. Let's break it down fully so you understand the deal's significance, Nvidia's strategic rationale, and what it means for investors. The basics. Deal overview. Elon Musk's xAI, an AI startup focused on developing artificial general intelligence, is currently raising $20 billion in financing, including both equity and debt. Nvidia plans to commit up to $2 billion of that as equity investment. This capital will anchor the purchase of Nvidia's next-gen Blackwell GPUs, which will be deployed at xAI's Colossus 2 data center in Memphis, Tennessee. xAI reportedly intends to run over 55,000 Blackwell GPUs at full build-out, aiming to support highly complex large-scale AI model training and inference workloads. This scale marks a huge expansion for xAI and solidifies its position as a Tier 1 AI developer, alongside the likes of OpenAI and DeepMind. Strategic rationale. Why Nvidia? What's in it for Nvidia? Executives have long stated Nvidia's goal as powering AI's future. This $2 billion equity infusion isn't just cash, it's a lock-in agreement ensuring xAI depends on Nvidia's proprietary GPUs. These specialized chips have become the technological backbone of nearly all top-tier AI models due to their parallel processing capabilities and energy efficiency. The deal cements Nvidia's role as a leading AI infrastructure provider and positions it to capture an outsized share of rapidly growing AI-related revenues. The financing structure. The $20 billion capital raise includes $7.5 billion equity and $12.5 billion debt, making it one of the largest private AI fundraisers ever. Importantly, part of the debt financing is secured specifically by the Nvidia GPUs themselves, not the company's broader corporate assets. This innovative collateralization reflects high investor confidence in the hardware's value and xAI's cash flow potential. This model reduces risk to lenders and enhances capital efficiency for xAI, enabling rapid scale without burdening traditional balance sheet metrics. Valuation and market context. Initial reports valued xAI at around $200 billion, with this round doubling initial ambitions. This valuation places xAI among the most valuable AI startups globally, just behind OpenAI and ahead of more established firms in AI software and services. It reflects investor belief in the transformational promise of general AI and the value of scalable hardware solutions underpinning that vision. Across the tech landscape, this deal echoes other mammoth capital commitments. Meta's $29 billion AI data center funding, Oracle's $38 billion cloud financing, AMD's strategic agreements to supply AI chips. AI's rapid adoption requires unprecedented compute power, and Nvidia's dominant chip architecture is at the heart of that growth. Nvidia financials and growth outlook. Nvidia currently trades around $185 per share with a market cap exceeding $4.5 trillion. Its trailing PE ratio near 53 reflects sky-high growth expectations. Fiscal 2025 revenues approached $35 billion, a roughly 50% year-on-year increase driven largely by AI demand and gaming markets. Gross margins hover near 65% and EBITDA margins at about 40%. Return on equity has stayed extremely strong, north of 45%. This $2 billion equity stake in xAI is both a financial investment and a strategic partnership aligned with Nvidia's long-term growth drivers. Competitive landscape and risks. On the competition front, AMD and Intel continue pushing into AI hardware with innovative designs and aggressive pricing. Emerging competitors like Google's TPU and smaller AI chip startups add fragmentation. Further, Supply chain risks persist amid geopolitical tensions affecting semiconductor manufacturing. Regulatory scrutiny concerning AI ethics and investment transparency also loom. Investors must weigh Nvidia's entrenched dominant position against these challenges. But few competitors match Nvidia's scale, product breadth, and AI market integration. Implications for investors. For long-term shareholders, this deal signals Nvidia's commitment to holding and expanding its near monopoly on AI infrastructure chips. Hands-on equity in a leading AI startup positions Nvidia to benefit from xAI's potential outsized success beyond chip sales. This also expands Nvidia's exposure from product to equity investment returns, boosting diversified growth potential. It's an ideal play on the continuing AI boom. Deeper tech and ecosystem impacts. From a technical standpoint, this deal accelerates xAI's ability to purchase the cutting-edge Blackwell GPUs, which utilize advanced Tensor Core technology optimized for AI workloads. Combined with Nvidia's software stack, including CUDA, cuDNN, and AI frameworks, this hardware-software synergy provides unparalleled performance and developer ecosystem leverage. The capital raised enables data center scale that can handle trillion-parameter models and enable revolutionary AI breakthroughs, potentially surpassing existing platforms. Future outlook. Looking forward, Nvidia's investment in xAI could drive further deals in AI venture funding and boost chip demand profoundly. This might trigger adoption across adjacent sectors: automotive AI, robotics, healthcare analytics, and cloud AI services. The deal also signals the increasing entanglement of hardware and AI startups via strategic co-investors. Nvidia shareholders should expect accelerated revenue growth, improved margins, and enhanced valuation support from sustained AI market expansion fueled by deals like this. Summary. To summarize, Nvidia's $2 billion equity investment in xAI is part of a $20 billion capital raise reshaping AI hardware funding. The deal locks Nvidia as the dominant chip provider for this leading AI startup, cementing its leadership. Innovative financing structures improve capital efficiency and reduce risks for xAI. xAI's valuation and plans place it among the top AI startups globally, alongside OpenAI. The AI chip arms race includes Meta, Oracle, AMD, Google, and Nvidia at center stage. Nvidia's financial performance supports long-term growth fueled by AI adoption. Competition, regulatory, and geopolitical risks remain, but Nvidia's dominant position is critical. For investors, this deal is a clear signal of future growth potential across hardware and equity appreciation. Thank you for sticking with me on this deep dive. If you found this valuable, please like, subscribe, and comment below with questions or thoughts on Nvidia and AI investment. Stay tuned as we continue tracking this dynamic and fast-evolving sector that's reshaping technology and markets worldwide. See you next time with more equity research insights.